Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Is Vietnam stuck in a situation where they have no choice but to change their exchange rate? Could it be that the US dollar and the Japanese yen are causing to put them in a position where they have no other choice but to change the exchange rate? Before I get into this, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel and I surely do appreciate it. If you're thinking about buying gold and silver, go check out our friends over there at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you will get a free half ounce of silver. So what is this in the news? Let's take a look. Imports, exports impacted by exchange rate volatility. Yes. The recent fluctuation in the US dollar and Japanese yen have both positive and negative impacts on Vietnamese traders, according to the experts of the Ministry of Industry and Trade. The recent fluctuation in the US dollar and Japanese yen, the Vietnamese dong has strengthened by 12% against the Japanese yen this year, while it has weakened 2.6% against the US dollar, which is kind of crazy because we know that the US dollar is truly not that strong. It's being artificially pumped. So what does that mean when it finally does collapse? Officials said the US Federal Reserve has tightened monetary policy to curb inflation in the US. Prices in the US have been rising at the very fastest rate in almost 40 years, while the Bank of Japan has continued with money easing to support the economy's recovery from the pandemic. According to the experts, the depreciation of the Japanese yen has partially benefited some businesses with loans to pay in Japanese yen and Vietnamese imports. Of course, you're paying with a cheaper dollar. Nothing is better than paying off debt with a dollar that is cheaper in value. So remember, Japanese did a lot of things similar to what we did. They tried to print their way out of trouble. There is something really disturbing going on with countries. The United States, China, just to name two, both don't give a crap that they're near bankrupt. I mean, technically, both countries are bankrupt, and that's all BS aside. But they don't care. They just continue to print money, because who the hell's stopping them? As long as people want their money, they'll continue to give it to them, and they'll continue to run those countries right into the ground. Each one trying to outspend the other, each one trying to do something to outmaneuver the other and become the superpower. Over there in China, I've been watching reports how they're flat ass broke. They can't even pay lower governments money to function, and they don't care. They just keep printing the yuan over and over. Many Japanese food and household items are favored by Vietnamese customers. The weaker yen has caused the prices of many items being sold at the supermarket in Vietnam to fall by 15 to 20%. Must be nice. Vietnam's BRG retail company imports more than 1,000 items directly from Japan. After the Japanese yen weakened against the Vietnamese dollar, the prices of Japanese goods also went down. Of course it is. If I can get more Japanese yen with my Vietnamese dollars, well, that means I could buy more products. It's cheaper to me. Since we usually sign an annual contract with the supplier in Japan, but we pick up the goods every month. The Deputy General Director of BRG Retail Company. The director of OSCA said not all Vietnamese businesses would immediately benefit from the depreciation of the Japanese currency. Annually, his company had to buy equipment from Japan at a cost of 100 billion Vietnamese dollars. However, his companies had to purchase via an intermediate partner, so it has not benefited from a depreciated yen, although the intermediator, I guarantee, is making buku bucks. In contrast, Vietnamese exporters working for a Japanese partner suffer a loss when they converted Japanese yen into the Vietnam dong. They explained that the long run, a weaker domestic currency will make importing goods more expensive. As a result, Japanese consumers will limit their spending on non essential imports. This will lead to a lower demand for imported goods from all countries, including Vietnam. When the US dollar appreciates against other currencies, including Vietnam dong, it increases the price of competitive of exported goods from Vietnam. However, it rises costs for Vietnamese importers. In the context of a sharp increase in the price of raw materials, a stable exchange rate will help play an important role in reducing pressure on imports while minimizing difficulties for businesses and supporting Vietnam's economic recovery. So Vietnam is straddling a pretty fine line. Take advantage of those countries whose currencies are depreciating, which then makes their currency more valuable. Now, people over here in the United States, we wouldn't benefit from it until that same move happens against our currencies. But let's say you have the Japanese yen, and all of a sudden now Vietnam, their currency is a lot more valuable than yours. Hopefully, people in Japan invested in the Vietnam dong, and when your currency depreciates, you went ahead and exchanged it, and you got a lot more money for your Vietnamese dong. So that's what we're waiting for over here, and it will happen because our money's going to crash. There's a new world reserve currency coming into play here. And that's going to help make our currency depreciate about, oh, I don't know, at the very minimum, 40%. Due to the rapid and unpredictable fluctuation in global markets, the MOIT has continued to direct businesses to take advantage of free trade agreements and make use of reduced tariffs. In addition, the ministry has also helped connect Vietnamese manufacturers with foreign suppliers via trade promotions, market deployment, and the application of the internet or logistic services while creating more favorable conditions for imports and exports activities. Yeah, if you're in a position to take advantage of it, you should. Unfortunately, our administration is an idiot. I look forward to getting Trump back in there so we can get things squared away. The Bank of Japan policy of keeping Japanese rates pinned down to support the economy, combined with the rising U.S. interest rates, has been a major factor in the Japanese currency recent weakness. To combat untamed inflation, the Federal Reserve raised its key interest rate by another 0.75% on July 27th night, further increasing how much consumers will pay on debt like credit cards, mortgages, and other loans. The federal fund rate, which indirectly determines the cost of loans, has increased from near zero from a range of 2.25 to 2.5%. This is the fourth rate hike in 5 months. Wow, the Fed is going for it. They're trying to they're trying to pay down as much of the debt as possible. So there you have it. Is the rate change being affected? Of course it is. Do you really believe the US dollar is that strong? You're sadly mistaken. It is not. As soon as Russia and China launch their new world currency, their new world reserve currency, you're going to see a huge drop in the value of our dollars. That's why you need gold and silver. That's why those of you holding on to the Iraqi dinar or the Vietnam dong, yes, stand by. Because just like Japan, if you were in Japan and had on to Vietnam dong before your currency depreciated, then you would have made out like a bandit. The same thing could be said here. We're almost there if you ask me. Anyways, that's it for now. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.